OPEC cut oil demand growth forecast for this year and next for a fifth straight month, making its deepest reduction to the 2024 outlook so far after agreeing to extend its supply curbs. The Organization of Petroleum Exporting Countries chopped projections for consumption growth in 2024 by 210,000 barrels a day to 1.6 million barrels a day, according to its monthly report. Now, the cartel has slashed projections by about 27% since July, as it belatedly recognizes the deteriorating market picture. And by the way, last week, the OPEC Plus alliance, led by Saudi Arabia and Russia, they agreed for a third time to delay plans to restart halted crude production, while also slowing the pace of increases once they do begin next year. But for more clarity on the matter, we have with us Peter McGuire joining us live from Sydney at the moment. Thanks so much, Peter, for making time for us on NDTV. What would you say the weaker outlook highlights? And do you believe China is expected to remain the main driver of global oil demand?
Well, good morning. I think a couple of things. Yes, I'll answer the first one. As far as consumption, China, they're really, I think, all guns are blazing to try and get internal demand up across the whole fabric of the nation. And commodity consumption, I think, will increase. And naturally, you would expect that to include oil. And all forms of energy. So I think that that's the first part, and electricity consumption, so everything burning of fossil fuels. And where we're sitting at the moment, there just seems to be a little bit of a disconnect as far as global consumption and where there's price takers. And I think the whole initiatives with geopolitical concerns and all of that wrapped around are going to be a fascinating next couple of weeks as far as price discovery.
Well, forecasts, meanwhile, Peter, on the strength of demand growth in 2024 vary widely. Is this partly due to differences over demand from China and the pace of the world switch to cleaner fuels?
I think so. I think that, and this is the dislocation in the sense what OPEC's looking at. You've got the International Energy Agency, you've got the EIA. So everyone seems to have a different broomstick as far as how much growth you're going to see or contraction as far as across the landscape of global demand. We're still producing and still consuming around about 103 million barrels a day. But is it going to, we see a pullback as far as that global consumption, or does it actually, ramp up from here? And this is the great dilemma that I think every agency has, and what they're looking at as far as the big drivers being the likes of China and certainly India, and across, very much the landscape of Asia.
Also, OPEC's outlook remains towards the top of industry estimates and actually contrasts with the International Energy Agency's far lower view. Any reasons why you think that's happening?
Yes, I think it comes to a point in time that, different viewing agencies or different interpretations as far as market contraction or market growth. They look at economic drivers, they look at GDP, they look at just consumption patterns, and they also take on board geopolitical concerns and price, all of these metrics that go into coming up with a forecast. And that's what you're doing. You're forecasting where growth is going to be or contraction. And that probably are some of the drivers that you look at. When you look at, like a consultancy agency, you ask for an appreciation of what's going on with price, and it's not unusual to see a divergence, and that's very much the part and parcel of how it is at the moment.
Meanwhile, you mentioned geopolitical tensions. Well, they have also kept oil's risk premium in play as traders actually await the formation of a new government in Syria after Bashar al-Assad has been ousted. Any challenges you see in the immediate future there?
I think so. I think it'll be interesting again how that is piecemeal together. Who's going to be in power? What's it going to look like as far as the fabric across Syria? And do you see other nations start to become more agitated? And I'm probably referring more to Iran. And that could be, I think, the powder keg that could change from a geopolitical standpoint, and price you could see an escalation in price if you were to see some sort of tension build. One needs to be considerate that oil prices are down nearly 17% since early July. So it's been and gasoline prices are back at 2021 levels in the United States. So prices are very trim at the moment, and it's not unusual to see tensions build, and that could well and truly be the standout here.